Today we'll show you that this strategy, it doesn't just work on Forex, it works on gold, silver, and various commodities as well. And now we'll just show the last chart that we have here. We have which strategy we know we need some clearly defined zone, which we have here. We even have a beautiful zone that is tested on one side and tested on the other. An impulsive breakthrough and some digging follow. With a money management ratio of 2 to 1, I can easily gain 1. And since we have in our strategy that if it makes a higher high in that swing than the previous swing, we can also plan for a second retest from that zone. And this second retest went smoothly without hitting the stop loss. And once again, we've hit the take profit. Here on gold, others were able to tighten it to 4 hours. There was also a very nice situation on silver when we were looking at those commodities. Again, I have a clearly defined zone that was impulsively broken, and there are all green candles. An elite moment has arrived, and it was flowing beautifully in the first year. Commodities as such, or metals in particular, have certain specificities in their encoding. There, the stop loss is more like a swing, because the silver tends to reach deeper into the market, going beyond that zone to pick up liquidity, and it often has larger fluctuations. It reaches deeper into that and then moves in our direction. I'll try to give an example. Oh, let me find one here. This is this example. If we set it to some reasonable level, I have a clear zone here, and we beautifully gained from it. If we set it somewhere, we have a nice setup. But as you can see, the market on the second attempt tends to reach deeper into that zone, to take more of that liquidity, which is currently sitting below that zone. And then it moves in our direction. So it just means approaching those commodities a little differently. You should place the stop loss in a safer position. Those are the bigger moves. And it makes for your bigger moves. So don't worry that it won't give you that day profit. Those movements are beautiful, those movements. So it's just necessary to adjust the strategy, which is quite similar to classic Forex, but you need to place the stop loss in a safer position. Just place it further back for the first and the second swing. Put it somewhere safer. With our classic money management, we need to plan and keep planning. But even if I hit that stop loss here, you saw that I have 2R here. Let's say I lost 1R, but we gained another 4R on that gold. And those commodities can be quite profitably exploited. But you could also defend that stop loss if we planned and accounted for the fact that it just reaches. Silver does this very often. You know, here I also had a beautiful zone. And this break rate just works. It's a wonderful strategy. It works really nicely. Again, I have a zone here. And notice that it reached significantly lower than that zone and then moved in our direction. It has to gather that liquidity. It needs to reach where the orders are. And those are usually behind a stronger zone, which was specifically the case here. Here, before it took off, before the big money poured in, it first had to gather somewhere, meaning here is the space where the orders are. The market slightly shakes it up and turns it into a beautiful foam orade. And only then did it test again, and it wiped beautifully. So price action works beautifully in this case. And if you choose to trade gold or silver, there's no problem with the strategy. You just need to adjust the entries a bit. The entry is recent, but it's more about the money management, which means placing the stop loss with a little more caution. So our break-free test strategy works perfectly on other things, on other instruments, not just on Forex pairs.